This is actually a really interesting fact that not everyone is aware of. Capital gains tax on residential real estate is the only thing in the UK that incurs a higher rate. Everything else is 10 or 20%.
Oh, wow. There we go. I didn't know that.
This is why we educate, Callum.
Yeah, this is why we're doing these videos, right? Great. Thank you guys for tuning in to the first in a new video and podcast series we're doing, where we're bringing in industry experts such as Bianca van den Berg today to speak with us about their sort of area of expertise. So today, as I say, we're talking with Bianca from GetGround, who are UK company formation specialists for holding property. I won't say any more because we're going to try and keep these 15 to 20 minutes so that people come in, listen, take a load of useful bite-sized info out of it, and then leave. So what have we got first? Why are we doing this video? Done that. Intro on you, Bianca. Can you perhaps give us a little bit of a background on yourself? You're in Singapore. What else should we know?
Yeah, that's right. First of all, thanks for having me. Very exciting to be part of your video series. So I'm Bianca, and I'm with a company called GetGround, and we specialize in the setting up and the running of property holding companies. So a little bit about myself. I'm originally from Holland. Spent quite a lot of time in London, where I worked in real estate, and my employer at the time relocated me to Hong Kong back in 2014 to look after property portfolios owned by Asian investors, but property portfolios in the UK. So I was in Hong Kong for 6 years, and then a year ago I relocated to Singapore with GetGround. And the few things that we do here is, first of all, educating the market on how best to structure investments and assist investors on how to get the best out of their property portfolios and their property investments. So that's kind of who I am and why I'm here.
Excellent. Thank you very much. I didn't know you were in Hong Kong for that length of time. I thought you came over with GetGround. So that's interesting. Okay, cool. So thank you very much, Bianca. I guess the main gist of what we're going to be looking at here today then is, one of the most common questions we're getting at the moment from everyone, and I'm sure you're getting, is, should I own it through a company? How should I structure the purchase? What's the best way to do it? Obviously, that's increased as a result of the MIRAS tax changes and things like that, mortgage interest relief at source changes. I think it was 3 or 4 years ago those started coming in. So just to keep it nice and simple, we've put together, when we spoke the other day, we put together a list of the sort of 3 most common FAQs. So I think perhaps if we just go through those, for those people listening that want more information off the back of this, we can put you in touch with Bianca, and you can have a one-to-one call or discussion with her to find out a bit more about how it would apply to your situation. But first question, should I own via a company?
In principle, I think everyone who is looking at investing in real estate should also look at whether a company structure is the correct way of buying. And the reason for that is, well, I strongly believe that anything that generates an income is a business, and businesses were designed to be efficient, and they were also designed to have a degree of separation between you as a person and where your money is coming from. Now, rental properties are exactly the same. Rental properties, they generate an income, so technically they are a business. So why not structure it that way? Mm-hmm. It's not the right structure for everyone, but it's also not just about the tax efficiency. So what we do is we offer transparency and trust to the market. And the businesses or the companies that we set up are very simple structures. We don't have alphabet shares. There's just one type of shares. It's a very easy and simple company, but at the same time, they're quite complex in how they're structured. So the companies that we set up, the SPVs, they're all structured in exactly the same way, which means that they're also able to be sold. And when you sell a company versus selling a property, that comes with a lot of different tax efficiencies as well. But other than the tax efficiencies, you should also look at, personal liability, which you will limit by buying through an SPV. It's much easier to handle your estate and your inheritance planning, which is very important for any investor who has children. The mortgage market is completely changed for SPVs, and it's also a lot easier to buy and sell with other individuals. So there's a lot of different moving parts that you need to take into consideration. But then saying that 65% of all buy-to-let properties purchased in 2020 were purchased through limited companies. And I think that says a lot on what a fast-growing market this is, and that for the majority of investors, this is probably the correct way.
Yeah, sure. Okay, so would you say it's a one-size-fits-all? I know when we talked last week about this, we were saying one of the most important things is actually, it's not just a case of, well, you're overseas, you're buying property, set up a company. It depends on a few different things, right? So what would you say around that?
Yeah. For example, if you're looking at a Malaysian that is based in Malaysia, they're entitled to a personal tax-free allowance of roughly £12,500. Now, if the investor in Malaysia is planning on only ever buying one property, not moving to the UK, not buying multiple investment properties, they don't have any children, then from a tax point of view, then you probably want to buy your personal name.
Yeah, right.
Because you wouldn't be paying any income tax or any corporation tax. But if you're planning on building a portfolio and there's a chance of becoming a higher rate taxpayer in the UK, then it completely flips.
Yeah, and I think that is very important, isn't it? You need to look at things like, do you own any existing properties? Are you eligible for that UK personal tax-free allowance? As you say, are you going to go back to the UK? In which case you want to keep your personal tax-free allowance free. So maybe straight away you own through a company, or do you have any other income derived from the UK? So there's, where's your spouse from, right? It's all of these different things will make a decision. So that's why I think, whilst we can give a good sort of overview here, right, as to the general benefits, I think for specifics, you need to have a bit more of an in-depth conversation, I think.
Exactly. Yeah. For us, it's very important to understand, what's your tax residency? What other income do you have in the UK? What other income do you potentially have in the UK in the future? How old are your children, if you have any? What other investments do you have? It's the whole package. And based on that, we can very, very well judge, what is the right structure for you and what is not.
Cool. Okay. And so I think we touched on a few of the benefits there. So say we have a discussion, let's make an example, I'm a Brit, I'm living in Singapore, I might move back to the UK and work. So I think it's probably best to start owning these companies through a company, these properties through a company structure straight away. So I'm going to set it up. Once I've done that, then what will say the specific benefits be? So obviously there's tax savings. Can you deduct costs? What are, a list of, say, the top 3 or 4 benefits once I've got it set up?
Yeah, so if we're looking at the tax side, and if we're assuming you're a British expat, you're living overseas, there's a chance you'll move back to the UK. The chances are that when you do move back to the UK, you will be a higher rate taxpayer. Otherwise, you'll probably stay where you are. So if we break down the taxes, the easiest way to break it down is that there's 3 different stages to the investment. They all come with their own taxes because, of course, we're talking about the UK. But the first stage, when you purchase a property, you pay stamp duty, land tax, and there's no difference between buying through a company and buying through an individual, because we're talking about investment property. So stamp duty, land tax is the same. But then when we move on to the period of ownership, there's 2 key advantages for property holding companies. The first one is that companies can offset their full mortgage interest rate from their tax bill. Individuals only get a basic rate tax credit. So that's a really, really big saving on its own, especially because your mortgage interest is usually the biggest expense to the investment. So being able to offset that is great.
Just a quick question. Are there any plans for that to change, or are you going to be able to do that within a company, offset the mortgage? Is that something you can do indefinitely, or the government say? Because I know when they changed it for personal properties, they gave a sort of a 4-year window. Is that set to change, or is it?
Well, who knows?
Yeah.
You never know what the government will do in terms of taxes, but I do believe that the change in mortgage interest was probably the biggest and the boldest move from the UK government to try and encourage individuals to buy through companies. And a lot of people ask me, why would they do this? Why would they give tax advantages or tax efficiencies to companies? Because doesn't the government receive less income that way? Now, the rental market is a very fast growing market in the UK. We're talking about generation rents these days after Generation X. Even developers are not off-selling all of their units anymore. They're holding on to whole blocks on the PRS side, private rented sector. So it's a very fast-growing market. Now, other than that, the majority of landlords in the UK, they're not professional landlords. They're accidental landlords, and they manage their property themselves. Not always are the correct taxes being paid. Then also you have your very experienced landlords that have their SPV set up in Cayman or in the BVI, and that's very much frowned upon by the government because, who knows if they're actually paying the correct taxes. So by having these UK limited companies owning real estate, it means that the government has far more transparency. And yes, less taxes are being paid per company, but there's a lot more of it because the correct taxes are being paid. So I don't believe that side will change because it was a very, very bold move from the UK government to change that. And they really want investors to go down this SPV route.
Didn't you say you guys had some sort of funding from the UK government when you were setting up GetGround?
Yes. So the UK government had made funding available to us via HM Land Registry. So every year there's a GeoNation program, and they make funding available to innovative companies and fintech companies. So we were the winners of one of those programs. But most importantly, they have allowed us to build our technology around their technology. So we are directly plugged into company's house, which allows us to set up these companies within 20 minutes. So it's a direct incorporation. We don't have any shelf companies. It's a direct incorporation, and it's done within 20 minutes.
Well, that's good. Obviously, it shows that they're backing and how much they're behind the idea, right? If they're able to do that.
Exactly. Yeah. So if we then look at the other tax efficiencies that come with these SPVs before we sort of wander off.
Right. Bring us back.
Bring it back. So you have your full mortgage interest rate that you can offset from your tax bill. But then also during ownership, companies don't pay income tax, they pay corporation tax. So for an individual, you start with 20% income tax, and then that easily jumps up to 40% income tax. Now, companies pay a flat rate of 19% corporation tax. So that's a saving on its own as well. It could be a significant saving depending on what your own personal tax rate is in the UK. Now, in the UK budget announcements last March, they did say the corporation tax will be increased to 25% in 2 years' time. However, businesses with a profit below £50,000 per year, they are protected from that increase. And it's very rare for a property to have a profit of over £50,000 per year. So those are the tax efficiencies during ownership. And then when it comes down to selling, this is where you see the biggest difference. So first of all, there's two ways of selling your property if you hold it through an SPV. You either sell the asset out of the company, you close the company afterwards. At that point, you would only pay your 19% corporation tax instead of your 18 or 28% capital gains tax that you would sell or you would pay as an individual. The other option, and this is why it's so important to have your company structured the right way, is that you can offer to sell the full company. And that's what you'll do if you're selling to an investor. So if you're selling to another investor and they take over 100% of your company shares, first of all, there's no land transaction taking place. So stamp duty land tax is not payable by your buyer. Now that gives you an immediate price advantage in the market because it's a deal. What realistically we've seen so far is that the saving in stamp duty land tax was split between the buyer and the seller. Now, the buyer will still need to pay 0.5% stamp duty on the value of the shares. It's just not stamp duty land tax.
Yeah.
So what we've seen is that the saving on stamp duty land tax was split between the buyer and the seller. So the seller sells at a higher price. The buyer is still getting a good deal. So that's a win-win situation, but also shares incur a lower rate on capital gains tax. So you would only be paying 10 or 20% capital gains tax. And this is actually a really interesting fact that not everyone is aware of. Capital gains tax on residential real estate is the only thing in the UK that incurs a higher rate. Everything else is 10 or 20%.
Oh, wow. There we go. I didn't know that.
This is why we educate, Callum.
Yeah, this is why we're doing these videos, right? Great. Okay. So what do, if people, if they want to do this, how do they, what's the process for setting up a company? Is it just have a conversation with you and you can explain how it's all done, or where can people find out? Obviously, aside from this video and our podcasts and your YouTube as well, you guys have a good YouTube. Where can we find out more information on how it's all done and get the ball rolling?
Yeah, so first of all, I would always recommend you to, or your clients to just schedule a call with us just to understand exactly what these property holding companies offer and if it's the right structure for them as well. But if clients already know that they want to set up a company for the purchase of their property, all they need to do is go online on our website, which is www.getground.co.uk. We've got a learning center on there as well. So there's a lot of information to be found on our website. Now, this is the beauty of GetGround. So we are the first and only company who does everything through technology. So you can actually set up your company within 20 minutes. Everything is done online. So instead of having to speak to a solicitor to structure the company, another formation agent to set up the company, and an accountant to run your company, we do everything in-house and all through technology. So all you need to do is go onto our website, create an account, upload your proof of address, your passport copy, you take a live selfie, which is the facial recognition, and you add your personal details, your property details, your solicitor's details, and you structure your company with any other shareholders if you have them, make the payments online, and then there's your company. So within 48 hours, the company is listed on Companies House. 2 days later, you have a company financial account as well, a UK company financial account. So that allows us to then very easily do the bookkeeping and the tax filing and the company auditing, because we will have visibility on the company accounts, but we don't have control. So you cannot just send an invoice to us and say, hey, can you pay this for me, please? Because we cannot do that.
Okay, that's excellent. Okay, awesome. Well, I think we've done 20 jam-packed minutes there of good content that people can use. So I think we'll leave it there. As you just said, if people want to find out more, we'll put links and stuff below the YouTube video so they can click to the website or click through to your email, all that sort of stuff. Yeah, just massive thank you for doing that first video with us, and hopefully we'll get you back again, in a month or 2 months time, or we can review it and perhaps go in a bit more detail next time as well.
Great, thank you so much.
Thank you.